Welcome to Market Overtime here on Schwab Network. I'm Diane King Hall. The stock market has surged to fresh all-time highs this summer, bouncing back from April's tariff-driven rout. And now, as earnings season kicks off, investors are watching closely. Will this next round of results fuel the rally, or could it throw cold water on the momentum? Let's break it all down with a special earnings season preview. Joining us now is Jay Woods, Chief Global Strategist of Freedom Capital Markets. And a quick note on tariffs. As of this taping, President Trump's July tariff negotiations deadline has been extended to August 1st. Jay, thank you so much for joining us today.
Great to be here.
I can't think of a better person to kick off earnings season with. And I know it officially kicks off in earnest with financials, but we've already got Delta Airlines out. Shares took off after those results, but it wasn't just about the results. It's about the fact that we have what? Guidance.
We have guidance. The shares are soaring, and you said they took off. I had to follow that, but no, this is very important, and I don't think people are realizing it. The one thing that kept us down in the doldrums, and the word of the year has always been uncertainty. In fact, FactSet had some data out. 84% of the companies during their conference call in the S&P 500 last year, between March 15th and May 15th, those that reported, 84% used the word uncertainty. The only other time in the last 10 years we've had that word used so much was COVID, and as you and I both know, living it down here, very uncertain times. So to get the first stock out of the gate, give us guidance. Forget the fact that it was lower than what they forecasted at the beginning of the year. They had a little clarity to give to investors, to shareholders, and I think they were applauded for that, hence the reason the stock went up as much as it did. Things aren't as bad as they seem, and right now, where things look, they can give guidance comfortably, and guess what? That's probably a low bar, so they're probably going to exceed it next quarter. Now, the ball moves to those financials when they report next week, and there's a whole bunch of them. So if you want to get into them, let's go.
So last quarter was difficult in terms of the lack of clarity, especially at the front end of the season. And then as we wound down the season, you were penalized as a company if you didn't give guidance.
No,
right?
Without a doubt. And people wanted to hear something, and those that just pulled back guidance or said we can't during this time, the automakers especially, and we understand why they couldn't give guidance, but now that we have one that had pulled back, come back and say we can issue some guidance, that's a good start. Let's see if it continues. I believe the financials will give guidance. They've been good as far as that goes. Then we have Netflix as well, J&J next week. So there's a whole slew of stocks that really will set the table for what could be a very promising earnings season.
Yeah, J&J in the week ahead as well. So let me ask you this before we dive into a look across the banks. I'm curious to know, when you think about the airlines, because we've had a lot of gains that we've seen as a result of Delta's guidance. United moving higher. You've got American Airlines taking flight as well. You've got even Southwest gaining some ground as well. Do you think that the roadmap now for the airlines, like you said, they set a low bar for themselves, but does that set a high bar to beat for the rest of the airlines?
Well, it does and it doesn't. I'm not a big airline stock fan. If you're going to play the airlines, buy the basket, the JETS, Jets, ETF. To me, that's probably a broad-based way of playing it. But the stocks are very streaky, very cyclical, where they have strong inclines and declines. And then right now, I think the momentum is for another solid quarter. But overall, it's something I would avoid. It's just more of the story they're setting for the rest of the discretionary sector, because people are wondering, are we traveling? Are we spending? You know, their numbers were slightly down as far as, you know, the economy class goes, but overall it was slightly positive. So I'll take it as a silver lining more than the coast is clear. And airlines, they're going to have a nice little few more percentage gain out of this, and they'll probably stabilize. Not where I would really want to be, but you know, you could get a quick play, another 5, maybe 10% to the upside from here.
Not like how United was last year, when United was one of the best performers in the S&P 500 for the year. Very different landscape. But let's talk a little bit more about financials. You got JP Morgan Chase that'll be up at bat, right? That's one that is key to understanding the health of financials, especially given their fortress balance sheet. I've started to hear some analysts kind of pull back their perspective from the sell side community about how those shares have done this year, saying essentially like where they are now, they expect not to have much momentum from here when you think about shares. But how do you think about performance?
Yeah, I can understand why someone would pull back. If you look at where they were in February down to their April 2nd, Liberation Day, April 9th, intraday low, they've rallied back tremendously. JP Morgan, Goldman Sachs, both up over 60% from the low. It's a heck of a run. They were overbought. They're starting to pull back. But as a technician, someone that follows price action is very telling. They didn't just go up and make back that loss. They broke out to all-time new highs. So when I look at the financials, you look at the leadership, JP Morgan, Goldman, Morgan Stanley, all report next week. What are all of them doing? Cities in this category, banks in this category, Wells Fargo's in this category. They made new highs ahead of earnings. They broke out of very big bases. So to me, I think price is telling us this is going to be a good quarter, and then go back a week. The stress test. All 22 banks that went through the stress test to say, worst case scenario, are we going to be able to survive? They all passed. Deregulation is coming. Mergers and acquisitions may be happening. Deals may be happening. We had a deal with Kellogg's announced this week. And who knows what the future brings. IPO activity coming back.
It's picking up.
I think the financials, I think the price action is telling us this is the time to buy, and they expect good results. And any pullback as we go into earnings, watch where they broke out of. They're going to be good areas to buy these stocks on a dip. So to me, any weakness in the financials because they didn't exceed expectations or the guide wasn't as strong as people feared or hoped for in this case, I think there'll be buying opportunities. So I'm very bullish on the financials. It's the one sector behind industrials, behind technology you want to see leading in what I consider a secular bull market, which we are in. And to me, I think they're poised to do very well, but we'll see how good the guide is.
Do you think we're going to see strong trading volume from the financials?
Without a doubt. I mean, trading has picked up here tremendously. The retail investor still has an appetite. We've seen some very successful IPOs. You know, CoreWeave, Circle. The pipeline is robust. That's they like to have me say here at the New York Stock Exchange, but it is. There are a lot of companies filing S1s that are going to go public. You're going to get to cover them on the Schwab Network right here on the floor. So to me, there's a lot of excitement there. And, you know, this tariff talk, yes, it's a headache. But what happened? This time, we announced tariffs that were the same as what we announced back on April 2nd in some cases. The market kind of shrugged it off. We're at all-time highs. So, yes, the president has some ammunition to use these negotiations in public to try to scare people. But guess who wasn't scared? The market. And the market's at all-time highs. So, to me, I think we get through whatever the where is the latest deadline? August.
I know August 1st, right?
We'll
before we get into tariffs, I'm curious to know your thoughts. You talked about the market being at all-time highs. We've also been watching this rally in Bitcoin. You mentioned Circle as well. I wonder if when we hear from the banks, we'll hear more about interest and appetite for crypto and any more activity in that space.
I'm sure they're going to be asked about it, but I don't think there's any one of the major banks that's going to just jump in all, with both feet. They'll talk about limited exposure, always looking at our options. You're going to get Jamie Dimon of JP Morgan give some sort of weather analogy and not give this rosy picture, even though it'll be record earnings. And
he's always so pessimistic off the back of the earnings
That's why
call.
he was probably a great trader like the people down here. You're always thinking about the next one and not celebrating your wins, because when you celebrate, something happens, and he's someone like us, a little superstitious. Yeah, we're doing well, but we're concerned that this could happen, this could happen, this could happen, and that's how you avoid some of the biggest disasters. So while it drives people crazy, makes great headlines, a storm is coming, or whatever weather analogy he uses, I don't expect them to spike the football or any of the big financials. But crypto should be talked about. We've seen success in those IPOs, and if there's more of a jump into that space with some of the large financials, it'll be interesting. What I want to see, second half of the year, not next week, M&A activity where some of these smaller regional banks, some of these small crypto assets may get scooped up by a big bank. We haven't seen a lot of mergers and acquisitions in the banking sector.
In a while.
Well, there's only been one going back to the financial crisis that was clean. And when I say clean, wasn't done out of necessity. Like you had Signature Bank fail in the regional banking crisis. It was Truist was formed in 2019 with BB&T and SunTrust. SunTrust. Before that, you'd have to go back to 2006, and that was Bank of New York and Mellon. So there haven't been many deals in this sector. I think the administration is going to give them the green light. I think it's time for somebody to look at some of these smaller crypto-friendly assets, and you may see some M&A heat up in the second half of the year.
Let's talk tariffs. Since you mentioned the Trump administration, we've seen a wave of these warning letters come from President Trump, posted to Truth Social, warning to, say, Japan, to South Korea, to South Africa about increasing tariffs and ratcheting up the pressure there. Then we also see that 50% tariff on copper, then the threats towards Brazil as well. What companies or sectors do you think are most vulnerable? Because it feels like, in terms of Mr. Market, the reaction is like, it's not as bad as April.
Yeah, Mr. Market is not really wary. It's like the boy who cried wolf. Okay, we've heard this before. But when he does make these announcements, the Brazilian stocks get hit. The rare earth stocks had a nice run because of another deal they did with the Pentagon. He will move pockets of the market, but it's limited to just those pockets. So when we talk about Japan, what Japanese stocks are going to get hit, it hasn't had this overhauling effect that you saw back on April 2nd. So we're going to take it one tweet at a time, or one Truth Social post at a time, whatever they call it over there, and not really, sweat it. Now, if something changes and August 1st comes and all of a sudden he puts his foot down and kind of throws off the people around him, the calming voices in the room, the Scott Bessents, then we could see a panic. And then you look at seasonality. August tends to be a rough month, so does September. So if we run into those months, any pullback with those headlines will be overblown. But I still think the ultimate path is up. We may have some pullbacks, we may have some headlines along the way. Those would definitely warrant those headlines.
Let's talk about another theme that you're watching in the pharma space, patent expirations. We've seen some news on that recently, for instance, with Merck and its acquisition, and that the view is there that has to do with the cliff that will come due to patent expiration of Keytruda, the cancer-treating drug, right?
Yeah.
And with the acquisition, they gain exposure to new innovation with regard to treatment for COPD. What are you watching? I mean, J&J's got results coming up. What are you watching across the space for pharma?
Well, yeah, this has been one of the most beaten down sectors of the year, and every time you think they're going to lift their head, there's another roadblock. This patent cliff is the real deal. So when companies get patents, whether it's a big drug like Viagra over 26, 27 years ago, after 25 years in most cases, they are now open to everybody. Everyone can make their generic form of that drug. We saw with Merck and Keytruda, which is about to expire. So what they're doing is they're looking at different biotech companies. So you want to talk about M&A activities, the biotech sector. That is a sector that's starting to lift its head. But you have Johnson & Johnson. I have to look at this because I don't know my drugs. Stelara is their big drug that is going to expire within the next year and a half. And Bristol Myers has two, Eliquis and Opdivo. So when they lose the exclusivity of these drugs, they're losing a big pipeline to their bottom line. So there's going to be more activity. So watch the biotechs and see what these companies can do, because right now they haven't been producing anything on their own. Pfizer, perfect example of that. Since the COVID drug, they've been really struggling. So there's going to be some M&A activity. So watch the biotech sector to be the benefactor of some of this. But for them to turn it around, we're going to need to see some new exclusive drugs in the pipeline.
That is our thanks to Jay Woods of Freedom Capital Markets, global strategist over there. Coming up, Market Overtime, we'll take a technical perspective on this earnings season with more insight from Gareth Soloway. He's got some charts to share. We'll get his technical insights next. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome back to Market Overtime's earnings season preview right here on Schwab Network. I'm Diane King Hall. Time for a technical preview on several key names set to report in the days and weeks ahead. For that, we want to welcome in Gareth Soloway, Chief Market Strategist, Verified Investing. Gareth, thank you so much for joining us. I know you've got your finger on the pulse of several names that are set to report this season, but why don't we look across the broader space first? We're around record highs on the S&P 500, and can't forget about the NASDAQ as well. For the S&P 500, from a technical perspective, what are you noticing, especially as it relates to momentum?
Yeah, so what we're seeing here is really interesting. The bullish sentiment on Wall Street and among retail investors is now approaching kind of a maximum. And this is what we saw back in 2021 before the market started to turn down. But essentially, what we're seeing is the market is up exponentially from the April 7th lows, new all time highs. Again, retail money is rushing in, but there's a bunch of major trend lines just lurking above current price that are going to push on the market to actually stall out here. And I do worry that, again, we have been lulled into a false sense of confidence of inflation's not going to be a big deal. The tariffs are going to have no impact. But I do worry that that's still to come in the data. And we're going to get CPI and PPI data next week on that.
What are you noticing then about, say, any volume or price action patterns that kind of either support further upside or signal those bumps in the road?
Yeah, so some great factors on a technical analysis basis is RSI negative divergences. And this is where the RSI is making lower highs while the stock market has been making higher highs. And when this occurs, it tells you that the breadth is waning. You still have the retail investors kind of getting into the market and buying the dip, but you're seeing no participation by institutional money at these highs. And that, again, is a warning sign. It doesn't mean we're going to top out today or early next week, but it's a warning sign that says, as an investor, I need to start being more careful.
I was at an event recently, though, with a lot of chart technicians such as yourself. And, you know, the takeaway that I had was that there was support for ongoing bullish sentiment, and not just sentiment. The signals were that the bullish patterns would continue. And the takeaway I had was that the retail investor flows was actually the smart money this time around. What's your thought on that?
Yeah, so I do agree early on in early April after the lows, retail investors remembered the COVID drop and all those type of things, and they went right into the market. So you're right. The institutional money was a little bit more hesitant. The institutional money, kind of the mid money, if you would, that came in kind of in the middle of the run, and it's still coming in into the highs, but I don't consider those to be the elite, right? The elite are the JP Morgans. Jamie Dimon was just out this morning talking about people being very careful or needing to be careful here about the markets and how inflation could actually kind of be a surprise to many investors. And then you also have people like Warren Buffett, who's still sitting on a massive cash hoard. And if the markets were going to go up that much more, I'm curious why he isn't pushing money into the market at this point. So again, for me, I'm more of just a pure chartist, and I look at the extended move that we've seen in the S&P from the April lows. I also look at how we are at new all-time highs, and people use that as a bullish signal, right? Hey, we're at all-time highs. We've broken out. But if you look at Bitcoin in 2021, if you look at other major market highs, there's a tendency for us to breach the previous high and then stall out. It kind of is the maximum bullishness when you take out those highs that can oftentimes create the end of a run versus the beginning or the midpoint of the run.
When you think about this earnings season and, you know, kind of the setup for it, and when you look at this broader chart of the S&P 500, do you think this earnings season could be kind of supportive of a bigger move, either confirming strength or breaking the trend?
Yeah, so this earnings season is going to be fascinating because last earnings season, expectations were rock bottom and companies were able to beat those metrics handily. Now, going in here, the S&P is 20% higher at this point. So the expectation, the bar that these companies have to beat is much, much, much higher. And that, again, brings additional risk to the investing public of saying, okay, well, you know, last quarter, they just had to basically make or beat earnings by a penny or so. This quarter, because their stocks, many of these stocks, by the way, are up 50 to 100% in just the last quarter. These companies are going to have to knock it out of the park. And that, again, brings additional risk that if they even say one thing about the consumer slowing down or other factors like tariffs having an impact, that does create an air pocket to the downside where we could see some big corrections here.
Okay, so let's talk a little bit about some of the names you're across. Nvidia, they didn't necessarily bring us to the dance this year, but they've been participating in the dance, and it's been one of the leaders within the Mag 7, and it's had quite the turnaround since the challenges it faced in early April. Now, it is a late cycle reporter in terms of this earnings season. It doesn't come until late August. But when you look across the chart, what are you noticing about the patterns in Nvidia now?
Yeah, and this is a fantastic chart because it's had such an amazing run. It just hit that 4 trillion and closed above the 4 trillion market cap level. But what's interesting about this is if you take a line from the high in 2024 and connect it out through the previous or the subsequent highs, we're actually just into that resistance level. So as a technician, I always tell people, ignore emotion. The emotion tells me, oh, you got to chase this, you got to jump on board. It's the greatest company in the world. The chart is saying, be cautious here. You've just now hit 4 trillion. That's a big milestone. Oftentimes we see markets or stocks top out at these key metric points. And then also the technical trend line there is telling us that we should see some sort of retrace. And let's be fair, 4 trillion. Remember, this stock had corrected to basically 1.5 trillion. So there's a massive amount of money that has flown in, and it probably is going to see some profit taking off this level. So again, I'm looking for a pullback. You're right, it doesn't report earnings still for a month and a half at least. But again, I'd be looking for a pullback in the coming weeks on Nvidia.
And then typically in recent quarters, it has pulled back off of earnings even when they beat. Are you expecting the same?
Yeah, so a lot will be determined by where it's trading going into earnings. So let's say it has a 10 or 15% pullback going into earnings. Then you generally say, okay, the bar has been lowered. They might be able to surprise Wall Street. But if it's still here or higher, then yes, you would look at that and say, okay, look for a sell the news event. It likely would pull back on earnings.
All right, let's talk about Taiwan Semi. That's obviously a major player in the AI supply chain. What are you watching when it comes to the chart of Taiwan Semi, and how do you say even compare that to Nvidia?
Yeah, so I mean, these semiconductor companies have just had such a remarkable run across the board. They've really led the market. If you talk about, even days recently where the S&P has kind of stalled out, the semis have carried the NASDAQ to new all-time highs. The question is, are we going to continue or are we due for a corrective move? And Taiwan Semi, per the chart, and they report next week, that chart has this trend line. As you can see there on the chart, we can see the upsloping ascending trend line where it was support for a long period of time. We had the big breakdown that occurred in April. We have now retraced back to that trend line. In technical analysis, when a line that is support and is hit multiple times is broken, when it retraces to that same line, it now becomes resistance. So from technical analysis, that standpoint, you'd expect a pullback next week on earnings.
Okay. Now, look, Taiwan Semi did post strong June sales, and we often get these sales numbers that can kind of give us an indication of what the roadmap looks like for Taiwan Semi. What do you think that does, or how does it fuel your expectations for earnings?
Yeah, so if anything, it drove the chart higher, right? It drove the price action higher. And so the higher you go, the more they're going to now have to come out next week and say something even more bullish to sustain that upward momentum. And again, the question is, okay, well, what's the proper valuation? It's basically a $1 trillion company at this point. And what I'm seeing, again, is just expectations have gotten a little too far ahead of where the stock is. And most likely when they report, their report is likely going to be amazing. You'll see a beat, you'll see revenue beating, they might even raise guidance, but I would say based on where it's trading, profit takers will come in.
I'm curious to know your expectations as it pertains to themes, not just for Nvidia or Taiwan Semi, but across earnings season. Because, for instance, the last earnings season uncertainty was clearly the theme throughout the season. Jay Woods brought this up that, and this is based on some FactSet data, more than 80% of companies who reported last earnings season, the word uncertainty came up. Are you expecting to hear that, or what are you expecting theme-wise?
Yeah, so I think you're still going to see a fair amount of that. And the reason I say that is because CEOs always look for a way to kind of hedge themselves, right? So we obviously know the economy is slowly slowing, but still holding up relatively well. But as a CEO, if I'm in the CEO of any of these Fortune 500 companies, I would say, okay, I'm going to give a good report, but I don't want to set expectations too high for next quarter after. So let me just say, hey, listen, there's a lot of uncertainty. They have the perfect outlet, which is tariff uncertainty, economic, Federal Reserve policy uncertainty, all of these factors. So I think you'll still see that, but really I think the market will look past that this time because it didn't matter last time, and it's going to go to their numbers. And where is their stock trading relative to what they report, and does it make sense? Remember, the S&P is now trading at 23 times forward earnings. Historically, that's very, very expensive, especially when the labor market is showing cracks.
Okay, let's move on from, I know sectors we're looking at AI. Let's talk about something happening in GE Vernova. That stock has been an outperformer compared to the S&P 500 year to date. It's still kind of, it's fairly young as a standalone stock. What are you noticing about the technical patterns for GE Vernova? And although its earnings are not due in the week ahead, they come close to the beginning of earnings season.
They do. I think about a week and a half away from reporting. And what's so fascinating, there's something in technical analysis called a measured move. And what you do is you look for a repetitive size movement from one period in a bull market to another period. And you can see on this chart is when you take the beginning of the bull run that occurred in basically 2024 into early 2025, that was 296 points of upside. And what we've done just now is we've repeated that exact move of 296 points to the upside, and we've just hit that level. And from a technical analysis standpoint, that's again called a completion of a measured move, and it brings probability more towards favoring a pullback here. And again, this is all psychological. It's amazing how psychology plays into investor sentiment, but you'll naturally see more sellers emerge now at this level of equaling that previous move.
And then Gareth, okay, I know you've got a chart for Campbell's. This one, for me, I wasn't sure where you were going with this one when I saw that this is on your list today. So I want to pivot to, this. I mean, it's staple. It could be a defensive play, but it's had a rough year so far. What catches your eye about this chart?
So one of the things, and I didn't want to come on here and be all bearish, right, on the overall market. There are opportunities out there. And what I've been noticing is that a lot of stocks like Kraft Heinz, Campbell's, these are all kind of staples that are somewhat recession proof, right? I mean, people are still going to buy ketchup or soup depending on, if the economy's good or bad. And what we're seeing in Campbell's is a bottoming tail on the daily chart, which is a reversal bullish signal. And we've just tagged major support. The stock is oversold. It pays a good solid 5% dividend yield. So if I'm an investor that's looking to say, hey, take profits out of some of these crazy runs, where am I looking to get into, especially if the economic news continues to slowly weaken? This, to me, and these type of stocks are where that money might settle. I do think these might be the ones that lead the market for the next quarter.
And then you, as you mentioned, you key in on psychology. You talk about emotion and sentiment. So beyond just the charts, are there any sectors or tickers that you're paying attention to where you notice any patterns as it relates to either extreme fear or extreme greed?
Yeah, one area I really do like is the China market right now. And so we're talking Alibaba, Baidu, Futu, all of these names. So number one, on a valuation basis, most of them are trading at forward Ps of 8 or 9. So relatively cheap compared to a Google, an Amazon, an Nvidia. But one of the other things, they're all starting to break out on the charts. And what we know is that money has kind of avoided China recently over the last few years. I think it's underinvested, and I do think money may start to look to go towards some of these other markets out there like China. So I do think there's a catch-up trade here in the China markets on stuff like Alibaba and Baidu.
And then quickly, I want to get your thought on, speaking of a catch-up trade, I'm starting to hear from different voices on small caps and some becoming more constructive down the spectrum, particularly SMID caps. What's your expectation as it relates to that? Or are there any charts that back up becoming more constructive there?
Yeah, I think the biggest one is the Russell 2000 itself, right? So we've seen the S&P at all-time highs, the NASDAQ at all-time highs, the Dow at all-time highs. The Russell is still not even close. I think still about 8 or 9% from its all-time highs. And so the idea is if we see interest rates starting to inch lower as the Fed looks more and more likely to cut rates later this year, there might be a catch-up trade in the small and mid-cap area like the Russell 2000. And I do think that's an interesting play. I would feel much safer right now being in the Russell than I would in the NASDAQ 100, considering how far the NASDAQ has run. I would play the catch-up trade with the IWM.
All right, Gareth, we will leave our conversation there. Our thanks to Gareth Soloway of Verified Investing. Be sure to subscribe to Schwab Network's social media channels, including YouTube, where you can find every Market Overtime episode. I'm Diane King Hall. We'll see you next time.